Hey, Bill Soriano from Pittsburgh, and about 10:30 here, Monday morning. Wanted to show you a couple setups one that I missed this morning here. There was a couple I missed this morning, and these are basically market maker trades. If you follow Steve Morrow at all, or his training, and the vector move. So coming out of the Asian range here, you look for three strong pushes, and it's basically a false move. And then the currency takes off in the other direction here. So right here, lately I've seen a lot of them. And if you want Steve's training, you can Google him on Google, Steve Morrow, M-A-U-R-O. You can find him here on Facebook. You can get more information on his training if you want that. But here you see coming out of the Asian range, you see the three big red candles, swipes down to the bottom, down to the stop hunt area here. You get the railroad tracks, and your entry's right here after the railroad tracks. If you take that, you're able to get your 50 pips with no problem, right? You're out within an hour. That's the way your trade should go, especially that market maker trade. That should be a very quick trade and get you 50 pips right away. Then, as you see, this moves up to the top here, and you get some railroad tracks at the top. Now remember, now you're looking for a counter trend trade after the move up. But the problem is the average daily range here on GBP JPY, the pound yen here, is 140 pips. So if you measure this from there to there, that only moved about 108 pips. So, you know, you could have gotten a few pips here if you got in. You could have gotten lucky and picked up, you know, a few pips. But if you were trying to get that 35 to 50 pip range, or if you were trying to get back to the water here, the 50-day moving average, you wouldn't make it. And then what would happen is it makes another move up here. And probably today here, this may go even higher before it does decide to really reverse. Although right now it is forming a very nice M at the top here. I would stay away from it because it's only moved about 121 pips. And again, the average daily range is 140. You get a similar move like that, I believe, in EJ. Pretty much all of the yen pairs made this strong vector move down out of the Asian range. Here you see the three big swipes, the three big candles. Here you see the railroad tracks. Your entry point here would be right here. And take a little bit of heat, and then it moves up, and you should have been able to get your 50 pips there within an hour. Okay, moves up to here again. Your average daily range is 99 pips on this one. So right there, it only moved about 92, and right now it's gone over 100. So right now, here's an area you could watch for a counter trend reversal trade back to the water. It's starting to form an M here. I would wait for this to come up here. I would watch for this to come up here and get within 3 pips of this high. So about 130.368. And if it would do that, then I would wait for it to start to make a move down and try to get in and take it back to the water here. It may not do that. It may just go down from here. We don't know. But the smart trade is to wait for it to come back up to here, because that way you limit your risk on the trade. Because what we do is we're going to have to put our stop. Actually, if you don't get a second leg M, then you're supposed to put the stop 23 pips above the high right here. So you got 23 pips, plus it's already 15 away from the high. You'd be risking 38 pips there. Now, if you get the second leg M, if it comes back, then you could put the stop just 13 pips above this high, and plus you'll be closer to it at that point, so you'll be risking less than 20 pips. We want to try to risk less than 20 pips in the trade, okay? Because a lot of times on these counter trend trades, you can only get 20 to 30 pips, depending on where the water is, the 50-day moving average. So that's, and you know, guys, I haven't figured out how to see who's actually on watching my video right now. So I got to figure out how to do that somehow, but I could do that later. But anyway, a lot of these yen pairs made that move down like that this morning. AJ made the move down, wasn't quite far enough though. Right now I'm also watching the dollar, the USD pound, Canadian, USDCAD right here. I'm looking for this top right here. Let's see where we at. Average daily range is 94 pips. See, it makes this move up here. And this tried maybe to fake you out. This could have faked you out a little bit here, looking like a market maker vector. See how you have the 3 big pushes up in the stop hunt zone? But I seen that and I didn't take it short. And the reason why I didn't take it short was if you scroll out here, you'll see that this is still pretty much in like a level 2 uptrend. Okay, I would say probably a level 2 uptrend off of this bottom. So you don't want to take a trade back toward that. You don't want to take a short there. You don't even want to take longs here. So I assumed when I seen that was going to go higher, so I didn't take that trade. And that was right here. See how it started to consolidate right here to try to fake you out. It didn't really form a nice M at the top, but it started to. Kind of formed a little M, but then it shot up higher. So now the average daily range on USDCAD is 94 pips. So if you go from this low right here earlier in the day up to there, you now have 122 pips. So so now what we're waiting for this to come back, and you see here that it looks like it did come back and get within 3 pips of that high there. So I'm actually going to go ahead and take this trade right here. A couple things I'm looking at here. It came back. See how it forms an M here at the top. It came back up within 3 pips of that high. So you get a second leg M, which means you only have to put your stop 13 pips above that high. You also see right here, it's right above the average daily range high here. So I'm going to take this. I'm actually going to take this trade short. I'm just going to do a 0.05. But I'm actually going to take that trade right there. And then what I do is I just pull this up like this to the high. And then I add 13 pips onto that. So 129,888. I'm just going to go to what is that? 130. Put it at 13000, right? If we pull this out here, let's see if we can see that stops right here. So I'm risking 22 pips. So I'm risking a little more than I'd like to at 20 pips, but I'm risking 22 pips on that trade. And then what I'm going to do here is, let's see, I'm going to put my take profit. Oh, no, that's the wrong thing there. I'm going to take my take profit and I'm going to put it right a little bit, just a little bit above the water there. So that's the water. So that's going to be 19 pips. So I'm risking 22 to get 19. That's about as close as the one-to-one as you can get. When you take these counter trend trades, back to the water, you're probably going to have a one-to-one risk to reward ratio on those. That's what that's going to be most of the time. When you're able to find, so I took that trade there, you just seen that live. So when you find these vector trades here, usually you have a much better risk to reward ratio because you're trying to get 50 pips here. And like I showed you here, even when you get in right here after this railroad track form, you're able to get your 50 pips, in less than an hour. So there you have it. So there was a couple things today I showed you, and also took the USD-CAD trade live, and we're looking for that to hopefully drop. Right now we're just about break even point because of the spread. And until I'll make a video, I'll do a live later on tonight to show you how this worked out for me, and also show you some other things going on in the day. So until next time, Bill Soriano from Pittsburgh. Let's make it a great day trading Forex.